Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for, as we're sitting here, Tuesday, the 22nd of March, 2022, just after 6:15 p.m. Central Time. Now, come Thursday, I'm going to say this now so then we can cover the markets, I have my live webinar. Invites have been sent twice to everybody that's on my mailing list, so you either come or you don't come off of that. But if you're not on the list, and there's plenty of you that aren't, all you need to do is take your cursor right now, move it up on the screen to the very top, and what you will see is, especially if you're using, obviously, a PC of any type or a tablet, an icon, click on it, register yourself. It's that simple. You'll get an email saying you've registered with your user ID and your password, and at the same time, there'll be a link on that email where you can write me questions about any markets you want me to cover. Pretty cool? I think so. I'll open the chart room at 12:15. I begin right at 12:30 talking. We end at 12:50. It's 20 minutes. I do not record it. Why? I could record it and post it real easy. I want you to attend. What everybody does when I have recordings, and I learned this, I'll wait and see it when he posts it. No. You either make it or you don't make it. Pretty simple. Okay. This is a hard market. The stock market has been stellar in its comeback off of the Ukrainian situation. Metal markets, the typical backbone of what should be moving up with inflation, not moving up with inflation. Industrial metals like copper are doing well. The dollar sort of floundering. It's got an upside bias in the trend up, but it hasn't been going anywhere. Energy markets are just sort of sitting here, and all you keep hearing about is if there's another energy shock of any type. In other words, for some reason, Russia can't get the oil and the gas that it's producing out voluntarily, or some other means that they can't get it out, that these prices can go up another 30-40%. That is the talk on the street, and I couldn't argue that at all. Bonds and notes continue with their assault, building in what? More and more rate hikes. Now, it's slow. It's a grind. They're not just running with it, which is a good thing, not a bad thing. Let me get to the charts here. You're at a resistance area on the weekly area chart of the S&P. Remember what I told you. When markets break under it, the first area they typically go is to challenge the 18-day average. When the market's over it, it's not uncommon to come down there and find support. Come there to find your support. Now that this is a bear market, at least I think it is, that would be the number in the zone that it should fail from. I'm certainly dead wrong, and I want to tell you, I'm not only full of Swiss cheese holes from being wrong, I don't know what I would do. I'd probably be a donut with a big hole in it if the market just goes right up through and makes a new high. Can it happen? Anything can happen. Do I expect it's going to happen in this environment? No. I'm not an economist. I'm a chartist. And on this market has formed, now we can call this a triple bottom. You never did come back to re-challenge the lows on February 24th. You came down, and it's turned out to be a triple bottom. I mean, bring into the room 10 chartists. I think you'll get anybody that knows their stuff. They'll say it's 10 out of 10. It's a triple bottom. That's bullish. And the market's on its way up. I'm not going to argue with that. The pattern, though, is strange. You've gone straight up without making a lower low day since back here. Now, let's find out what that day is, because this is what captures people. You have a big outside day to the upside. This all happened on March 15th. It's only a week ago. But you have launched this market dramatically from the 41.29 level. I mean, this is a big move. You're almost up on the chart, 400 points. Doesn't look like it, right? It's huge. That's a big move. I think we're in an area where the market's got real problems. You're up to the 200-day average, the 100's above it. You're on a stilt to the upside, and you keep hitting the upper Bollinger Band. Generally, the combination of the Bollinger Band and the 100 and 200-day average is enough to stop, be it a break, if it were falling to it, or a rally if you're going to it. Proof right back there. back here. You see what I'm getting at with those averages? But now we're talking the Bollinger Band. And I don't have anywhere to show the example. But that's why I'm saying that. I am not a top picker. I am not telling my clients go short. In fact, I told my clients not to be in the market. I was on national TV just this past last week. And I was asked, what trades do I like? I said, I don't like anything. I said, I think this is a time where you hold and put your hands in your pocket as a commodity trader, and you're just saying to yourself, I don't know. And it's good sometimes to say, I don't know. It's nice to have an opinion, but an I don't know works. Now, let's look at the market. On the close today, both the red and the blue numbers were over 80. Overbought. If they close today like they are now, that's day 2. If you get 3 days in a row, which would be through the close of business on Wednesday, where these numbers are both again going over 80, 2 setups happen. Number 1, the first one is a buying of break setup until the red line closes back under 80. It's a specific number, 79. I wouldn't want it under. And if it closes under 79, then I start getting bearish, saying, you've exhausted this, you're probably going right back to the 18-day average. What do I do right here? Absolutely nothing. That doesn't mean I'm telling you what to do, but when people ask me what I'll be saying to do, that's what I'm telling them. I have the same dilemma in this market. Same move to the upside, pretty stiff resistance at those 3 numbers. Unlike some of the others, to get up to an all-time high, you really got to go much higher than where you're at, 2,000 points, in fact, to do it. So I don't think that's going to be the case. And why should we go to new all-time highs? Is the economy that strong with the pricing in 6 to 8 interest rate hikes, the running off of the balance sheet, inflation going crazy? I don't know. We're having more gasoline giveaways in Chicago. Now 50 gas stations. You're going to be able to pull up this week. The cars line up for blocks. $50 per car. Load it up, drive out of here. Load it up, drive out of here. That's what they do. All right, pretty interesting. You're overbought. Same setup there. When I look at the Dow, same setup. Day 1 of embedding on Tuesday. Day 2 is tonight. Got to get through tomorrow, and then the day after. I have really big resistance. I mean, this is where I tell traders the pros are coming out. I'm not changing because the market's getting up there. In the Russell, this is the market I told you that I think traders are avoiding being short this market in any manner. For some reason, everything's changed. Traders are liking the small caps. I've noticed it. I've been saying it now since, I think, February, early February. And I'll stick with what I've been saying. But again, not trending. Classic, a lot of resistance between 2084 to 2190. The next 100 points loaded with resistance in the market. In the VIX cash, I think the pros began writing puts on the first challenge of the lower band looking for the 18-day average. Are we embedded? Not here. Both numbers not under 20. Day 1, day 2. Now tomorrow you can embed. You generally don't. So if you're not going to, it means you're going to get a rally in stocks. This will pop back up. And that fits in with some of the areas that I'm saying. Doesn't mean I'm right. Let's assume it embeds. Then it's just like I said with the bullish embedding in the stock index. Until the red line gets over 21 on a close, the pros will be selling this market. Would you believe that? They're basically saying we don't need insurance. The stock market's going higher. Pretty interesting thought. Bearishes can be in the bonds. Lower highs, lower lows, running against the Bollinger Band, not closing under it. Notice that. And embedded. I think every hard rally will be sold until the red number closes over 21. Same thing in the 10-year note. Same in the 5-year, to tell you the truth on that one, too. So all these, that's what I think is going on. In the dollar index, the market is caught. Gee, interest rates are going up. Is that good for the U.S. economy? What's that going to do for the U.S. dollar? I don't know. At the same time, while the Ukraine war is going on, the dollar has already seen other currencies. They've had to adjust to it. Now, central bank after central bank is raising interest rates or talking about raising interest rates. So it's nothing new. I think the pros are nibbling on the long side, and I don't think they're going to risk very much. I think if the market just gets under 98.16, they go, so long, I'll see you another day. So remember, I want to see you on Thursday. Remember how to get to the webinar if you don't know yet. Remember what I said? Take your cursor, move it up, click on the white icon, fill out the form, and then I'll see you Thursday. Take care.